Okay, so it's a very good morning to you all. I thank you, as always, for registering and participating in the webinars that are brought to you by the Securities and Exchange Commission of Zimbabwe. My name is Farai Mpofu. I would like to give other participants a chance to join. So I am proposing that we give each other another 3 to 5 minutes. So my expectation is that by exactly 10 past 10, we will jump into our webinar and jump into the conversation and the topic of the day, which is to do with our CIS and the performance analysis, today brought to you by both the Commission, Securities and Exchange Commission, and Interlego, the coordinators and those who bring the survey, which we see monthly, which comprises of all the fund managers under the CIS. So another 5 minutes, please, and then we'll begin with the promised offering to you all. So just take a breather, grab some water, get a coffee, and then we'll convene at 10 past. Thank you so much. To you all this morning. I would like to extend a very warm welcome to you and to indicate that this is the last in the three webinar series that we have been running as a commission in conjunction with Interlego, the coordinators of the monthly collective investment scheme survey. We have had them talking on a variety of topics which are to do with this particular asset class. And today we are bringing you an analysis from two perspectives. One is from the perspective of the regulator and what they are seeing at apex level. And the other is from the perspective of Interlego as those who analyze and coordinate the survey. My name is Farai Mpofu. I'm responsible for investor education at the Commission. And with me this morning, I have two presenters. They are two gentlemen. The first is Ngonizashe Makaha and Owen Yamusi. And although both of them do not really need much introduction, for my colleague Ngoni, I will simply say that he is a licensing officer in the Department of Licensing, Supervision and Surveillance, and he is a supervision and surveillance officer. Owen also requires very little introduction. Suffice to say that he's a senior consultant and head of corporate advisory at Interlego and has been the anchor presenter as we have explored this very interesting asset class, which is making a comeback for those of you who've been in the sector for a while. And we are looking forward to seeing the growth of these collective investment schemes as they provide not only a great entry point for our investors, they also provide for the inclusion drive that the Commission is mandated to do by our parent ministry, who derive their mandate from the head of state. So financial inclusion through financial literacy is a core deliverable of the Commission. And today, to help us explore the issues of how these have done, what the performance looks like, what the return has been, what indeed the securities market intermediaries, the fund managers, are experiencing. We have two persons who are immersed in this area, and they'll be taking us through their practical experiences, their analysis, and their reflections on this particular area. So we will be commencing with Ngoni, who will take us through his high-level perspective. And once Ngoni has taken us through his presentation, we will not at that moment pause for questions, but please do note down your questions, either there where you are or in the chat. And then we will transition to Owen, who will then give us the benefit of the regular deep dive they do into this asset class. He will give us his presentation, after which we'll open it up for questions and hope to have wrapped up sometime around 11 o'clock. So for now, Ngoni, I'd like to invite you to share your screen and take us through your presentation. Thank you very much and welcome to you participants. Thanks for being here with us today.
Thank you very much, Farai. Can you please confirm if you can see my screen from your end?
Confirmed. Thank you, Ngoni.
All right, thank you so much. Hello, everyone. My name is Ngonizashe Makaha. As Farai has already alluded to, I'm in the Supervision Surveillance Department as a Supervision Surveillance Officer. And basically, I'm responsible for asset management firms and collective investment schemes. I understand on this webinar, there are asset managers and there are also members of the general public. So I think I've structured my presentation in a way that it speaks to the asset managers. It also speaks to the general public. Well,
Ngoni, put us in presentation mode, please.
Okay.
Thank you.
Thank you. All right. Is it okay now?
Confirmed. Please continue.
All right. Thank you. All right. So this is how my presentation is structured. I'll first of all look at the definition and legal framework. Then I'll look at the status of collective investment schemes in Zimbabwe. Then general performance year to date, tips for the investor, and the prudential principles for unit trusts, as well as prospects. So basically, the definition for unit trust is derived from Section 3 of the Collective Investment Schemes Act. And it says a unit trust or collective investment scheme is an arrangement with respect to property of any description, the purpose or effect of which is to enable participants to participate in or receive profits or income arising from the acquisition, holding, management, or disposal of the property. So collective investment schemes, there is a whole bunch of legal framework governing collective investment schemes in Zimbabwe. The primary legislation is the Collective Investment Schemes Act, and this is supported by subsidiary legislation, including the statutory instruments 172, 173, 175, and 176 of 1998, as well as statutory instruments 107 and 108 of 2017, as well as statutory instrument 268 of 2019. So I think there is a lot of legal framework which supports the operation and compliance issues surrounding unit trusts in Zimbabwe. What is the status of unit trusts as of 30 September 2024? We have 48 active collective investment schemes in Zimbabwe currently, but in total we have about 83, and this includes collective investment schemes under consideration for licensing and also dormant collective investment schemes. We have most of the unit trusts equity based. We have 19 of them. We have 10 money market and 5 hybrid. We have also seen a growth in real estate investment trusts. We now have 3 which are licensed at the moment, and we also have a few which are under consideration of the licensing team. We also have 1 livestock-based unit trust, which is the Momemari Unit Trust, which is managed by Silverback Asset Management. The CI's performance year to date, what has been going on. Funds under management, Q1 2024, they stood at 913 million ZiG. That's for ZiG denominated collective investment schemes. The USD denominated investment schemes, they were 37.36 million as at 31 March 2024. But we have seen the growth as at 30 September 2024, ZiG denominated unit trusts are currently standing at ZiG 1.5 billion, and the USD based unit trusts have also grown to 71.59 million. I think you can see the remarkable growth in USD denominated collective investment schemes. But however, we have seen a decline in the number of unit holders, and this is mainly attributable to maybe there are a number of collective investment schemes which have fell dormant. So as at 31 March, there were about 87,344 unit holders, but that is since fallen to 81,007. But this is mainly attributable to some schemes which have been discontinued. I understand there are investors who are looking to invest in unit trusts. What is it that you have to look for as an investor? First thing, always check if the unit trust is licensed by SECZim. Avoid pyramid schemes and fraudulent schemes such as e-creator. So on our website, all licensed entities and licensed collective investment schemes actually, you can actually find all the licensed collective investment schemes on our website. Then number 2, it is always important to take time to understand contents of the trust deed and the prospectus. As an investor, before you commit your funds in a collective investment schemes, always take time to understand the contents of the trust deed. what does the trust deed say in terms of distribution of income, in terms of asset classes to be invested in, and what does the prospectus say? What are the underlying assets? This is very, very important. Then number 3, always lodge your complaints. Our CIS Act requires every CIS manager to maintain a complaints register, and the SECZim will always inspect that complaints register. And in case that is not working, you can always engage the trustee and even SECZim if such complaints are not being attended to. Number 4, always take interest in the audited financials as well as the conduct of the scheme manager. I think all unit trusts in Zimbabwe are required to publish audited financial statements yearly. And as an investor, it's your chance to actually look at the performance of the respective collective investment schemes, as well as the conduct of the manager. How is the manager how is the manager placed in terms of market conduct issues? That is very, very important. Then what are the prudential principles and requirements we apply on unit trust as SECZim? As SECZim, monthly we require for the form CIS4, which basically contains the net fund value of the scheme, the liabilities which are in the scheme, and this is where we actually get to determine whether the asset manager is acting within the confines of the Trust Deed and the Collective Investment Schemes Act, as well as subsidiary legislation. We also require annual audited financial statements 3 months after publication date. We also require quarterly returns, trustee reports, and on periodic basis, we do on-site and off-site inspections on CIS managers and trustees. Then what are the industry prospects? What are we seeing from our end? We have seen a growth in innovative products. I think REITs, there are a lot of REITs which are still under consideration of the licensing team. And this sector has been growing, and we have also seen a lot of commodities backed unit trusts, including climate-based investment instruments like your carbon credits, which are basically modeled around collective investment schemes. Then we have also seen a growth in USD denominated collective investment schemes. I think from my previous slide, you've seen the growth in USD FEM from about 38 million at the start of the year to about 71 million as at 30 September. And as SECZim, we have also enhanced surveillance on collective investment schemes. And we also advocate for adherence to best market conduct principles. I think that's the end of my presentation. Thank you very much, Farai. I think I will then pass on to you.
Thank you very much, Ngoni, for taking us through that presentation. I think it was short, it was concise. It touched on the key areas, and I think it showed us where the growth has occurred and raised the troubling issue of dormancy, which, Ngoni, I would ask you to hold on to and maybe discuss further when we enter question time. I think we want to know a little bit more about that, because on the one hand, the pipeline seems to be fairly active, but on the other, we have this dormancy ticking up. In the meantime, welcome to those who've just joined us. Thank you for joining this webinar this morning, a discussion on collective investment schemes and their performance and the activities of the fund managers. For now, we'd like to be taken through a presentation by the managers of the monthly survey, which is published. And for that, I'd like to invite Owen, who's been the mainstay of this series that we have been discussing. And I notice you're sharing your screen. Your presentation is visible. Let me hand over to you, Owen. Thank you. Hello, Owen. Are you able to unmute?
Yeah, sorry for that.
Thank
So
you.
yeah, no,
Welcome.
thanks a lot, Farai, and yeah, it's a pleasure to be presenting once again to the investor community in the latest series of this webinar. As you have seen from our previous iterations of this particular webinar, we cover a lot of key elements related to the Grow Wealth Unit Trust Survey that we produce monthly and publish for the market and for the investing public to be well appraised in terms of how their investments are doing from a unit trust perspective. I think I'll just do a quick recap in terms of why we do a unit trust performance survey. I think from our previous webinar, we did touch on these key elements. Obviously, investor education is key. The more investors are well appraised in terms of investment options that are available to them in the market, the more they make the right decisions based on their own circumstances. So understanding all the different asset classes, including unit trusts that are available in the market, is important. Also, information efficiency. I think it's important to disseminate information so that the public can get that appreciation of what are the key elements of information that do drive performance of unit trusts. Then also risk assessment. Obviously, the strategies do differ across the spectrum of unit trusts that we have in this particular market. So it's important to be able to assess the different risk profiles of the unit trust products that we have and be able to decide for yourselves if your particular risk appetite is aligned to a particular product that is in the market. Transparency and accountability, I think that speaks for itself. It's important for the public to know all the essential details of all the unit trust products that are available, and also to see their performance and see how the managers are accounting for that and attributing that to the different strategies or the factors that may affect performance. Regulatory compliance, I think Goni did touch on that in terms of the need for regulatory compliance for these collective investment schemes. And then performance benchmarking is always important, and I will touch on that as I go through this particular presentation. So when we look at performance of unit trusts, what are some of the key performance metrics that we examine? One of the most common and readily understandable performance metric is the total return. This basically measures the overall return on investment. So it includes your capital gains on your investment, any income from dividends or interest payments that may be received, and any other additional add-ons that may be associated with a particular investment. So you would find that for the vast majority of your unit trusts, capital gains are very important. I think you saw on Goni's table there that our unit trust landscape is dominated by equities related unit trusts. And in that particular segment, capital gains is particularly important. Then you also have other unit trusts where you may not necessarily see significant capital gains per se from time to time, but they do pay regular income in the form of dividends or interest. So your interest-bearing unit trust products are an example of that. And to some extent, your property-related unit trusts also fall into this category, though they tend to be kind of hybrid because there is a capital gain element as well as an income element in those particular vehicles. So the total return is really a key metric, and you will find in our Grow Wealth monthly unit trust survey that we do look at this particular return element at great length. Another key metric is risk-adjusted return. So you might find, for instance, a unit trust product that publishes a performance number and tells you that we have done 120% return over the last 6 months or a year. But what is also then important is to look at what the risk adjusted return is. So how much risk has the manager taken in order to achieve that particular return number? So the return number may be high, but maybe the manager was also taking a lot of risk in their tactical approach to managing the unit trust fund. So when you then adjust for the risk that was taken, you will then perhaps be in a better position to then benchmark the performance of that particular unit trust product with those others that may be taking lesser risk in the market as well. So the risk adjusted return is very important for investors to understand what is really driving the performance of a particular unit trust product. Volatility is another key measure that we look at. Just how volatile are the returns of a particular unit trust product over a defined period of time. This is a key measurement of risk. So when you see a unit trust product, particularly on the equity side, where its returns are quite volatile, that itself is an indication that the risk rating of that particular unit trust fund is of a higher magnitude than one maybe that is less volatile. Obviously, it all depends on the underlying assets that the unit trust fund invests in. So if you are investing in equities, you may find that there is greater volatility, and even within categories of equities, you find that the volatility does differ. If you're looking at mid to smaller caps stocks, unit trust funds that invest in those may have a higher degree of volatility than those that stick to the larger capitalized stocks, the blue chips that are on the market. The expense ratio, of course, this is not something that many people would look at on a regular basis. I think unit trusts do obviously publish their annual fees as a percentage of the funds from time to time. So as an investor, you can gauge for yourself just how a particular unit trust is doing vis-a-vis its percentage performance fee. And when you juxtapose that with the return that that particular fund is earning, then you are able to see. So for instance, if you look at a certain fund and you see that its percentage fee is perhaps on the highest end of the market, but maybe the performance is not justifying that particular fee, then you are able to gauge to say, okay, this manager maybe is underperforming relative to what they are charging. If a manager thinks he's got a particularly good strategy that outperforms the market, they may charge a higher fee for that in a sense. But if they're failing then to outperform the market whilst their fee remains high, then you are then going to look at that and think, well, they're probably underperforming. We also have the net asset value of the fund itself, pretty much the value of the assets netted against any liabilities that the fund may have from time to time. That is a metric that we also tend to look at from time to time. And then we also do benchmark comparisons where we look at the performance of a particular unit trust fund benchmarked against maybe a particular index or against the average of the peer group. That is something that is very important for us to see where on the performance scale and in the greater scope and set of funds that particular fund does lie. So I think these are the essential performance metrics that we tend to examine when we look at how our unit trusts in our market perform from time to time. Now, what I have done, I've just taken some snapshots from our September 2024 report, and I'll just do a quick talk through in terms of a sampling of 2 funds. So I have 2 equity funds that I've selected from the report. We've got the Old Mutual Equity Fund, and we also have the Platinum Investment Managers Blue Chip Fund. So when you look at our report, what you will see is that we categorize performance based on specific time periods. So for instance, we've got the September 2024 performance number. So that's just a performance of that particular fund within that particular month. And then you've got a July to September performance number. So essentially covering that period from July all the way through to September. And then we've got an April to June period. So essentially that's quarter from April to June. And then you've got the January to March, which is the first quarter of the year, and then the October to December last year, which was the previous quarter. So we basically look at all these quarterly performances, and then right at the end, you see that we have the full year performance, which basically tracks the performance of that particular unit trust fund over a 12-month window. So when you look at the 2 funds that we have selected there, you will see that the Platinum Blue Chip Fund performed quite well, almost reaching 80% performance in the month of September. The Old Mutual Equity Fund was significantly lower than that at around 42%. But obviously you can tell that the strategy may be different in terms of these equity funds, and what perhaps really drives the differences in performance is the actual stock selection that underlies these 2 funds. So you find that whilst the Platinum Fund did outperform in the month of September, it underperformed during the quarter from April to June this year, actually registering a negative performance of almost negative 5%, whilst the Old Mutual Fund did register a 37% return over the same period. If you compare the 2 funds over the first quarter of this year, a 327% return for the Platinum Blue Chip Fund compared to a 280% return for the Old Mutual Equity Fund. But on a year-on-year basis, if you look at both funds, they registered almost similar performances, 650% return. And by the way, this is in local currency, 650% return for the Platinum Fund and a 622% return for the Old Mutual Equity Fund. So both funds performing reasonably well over the time period, and they both were essentially tracking the broader market sentiment that we were seeing on the stock exchanges, both the Zimbabwe Stock Exchange and the Victoria Falls Stock Exchange, as the case may be. But they broadly mirror each other to a degree. Obviously, from time to time, there are some discrepancies in terms of their performances. And again, that speaks to actual stock selection that a particular fund manager pursues, which may be different from the other, and as a result, you find that the performances are different. So when you read through our Grow Wealth report, it is important to then have an understanding of not only the distinction between the different periodic performances of the unit trust themselves, but also what is really driving the performance differences. Asset selection is one such driver in terms of equity unit trusts. Depending on which particular stocks a manager selects, you will find that they will experience a specific type of performance over a defined period of time. But broadly speaking, these are perhaps the most popular category of unit trusts that we have in the market. They tend to play an important role, especially from an inflation hedging point of view. And on this next slide, I will just talk of some of the key performance drivers, especially of equity unit trusts. So from an economic environmental point of view, our local economic conditions, particularly inflation trajectory, currency volatility, do influence investor behavior, and investors invariably have been going to the equities market to invest there as a hedge against inflation. This is the one asset class that tends to respond quickest and most readily to some of these macro economic developments that we experience in our economy from time to time. Market sentiment, so whether there is positive or negative sentiment towards the broader economy or the political environment, this can significantly impact our equity markets. You will find, for instance, that whenever we are approaching maybe an election season, investors tend to take a back seat on the equity side, so that they have this wait and see approach to see what transpires post the election, and then market sentiment then moves in a particular direction depending on what would have happened with an election. This is not unique to Zimbabwe. This is something that we see everywhere. I think you will see it even in the forthcoming US presidential elections, for example, where the markets tend to respond in a particular direction depending on how they think the outcome of the election is going to be. So generally, if there is positive or negative sentiment, you'll find that equities markets tend to respond, and by extension, unit trusts funds that are focused on the equities asset class tend to also then experience that particular movement as well. Then you have corporate earnings. So from time to time, when listed companies do report on their quarterly or half-yearly or yearly performances and publish their financials, there will be obviously a response from the broader market in terms of how the market looks at those numbers and how they are going to filter into share prices and ultimately into the unit trust performances themselves, since they hold predominantly equities that will be listed. So if a company reports a strong earnings position, that will filter into a higher share price on the Zimbabwe Stock Exchange or on the Victoria Falls Stock Exchange, and naturally the unit trusts that are invested in that particular stock will then benefit by seeing higher unit values as well. So corporate earnings are really very important. I think the analysts in the market do examine this particular performance driver quite a lot. They do have their own valuation models, which they then use as a basis to give recommendations to say, is this stock overvalued or undervalued? Should investors buy or sell? And your fund managers for the unit trusts do that extensive analysis as well for the entire portfolio of listed equities that they do hold, and they do the portfolio rebalancing from time to time as they determine whether a particular stock is maybe fairly valued, undervalued, or overvalued, as the case may be. Then also foreign investment is a key performance driver. Whenever we have significant foreign investment or capital flows, that improves market sentiment. And sometimes you actually do have portfolio flows where you have foreign fund managers looking to invest in local equities on the Zimbabwe Stock Exchange or on the Victoria Falls Stock Exchange. That invariably will then drive price trajectories of the various listed equities and also then drive the unit trust performance. So you find that for the equities class, these are some of the key, this is not an exhaustive list, but these are some of the key drivers that we see on our local market in terms of how the unit trusts perform in this particular category. What I've also done is to then essentially juxtapose this with a different class of unit trusts. These are your gold coin unit trusts. We have two of them, the Bad Santner Gold Fund and the Old Mutual Gold Fund as well. Fairly new unit trusts that were introduced on the back end of last year, 2023. So we are approaching about just about a year now with these unit trusts in the market. Now, the performance of these funds obviously is interesting because the underlying asset are the gold coins. And we know gold is a precious metal. It's an international commodity whose dynamics are influenced by a multiplicity of factors that usually are beyond our local sort of dynamics. So if you see it, both funds performance essentially mirroring each other, they are fairly similar. 87% monthly performance for the Babson Gold Fund, 83% for the Old Mutual Fund, 96 and 98% for the third quarter for both funds, 268%, 247% for the first quarter of this year, and just an average of around 19% for both funds for the last quarter of 2023. So these funds essentially mirror each other, and it's not surprising that they have perhaps a much stronger correlation because they are investing in essentially the same sort of asset class, which is gold, and they both obviously track the international price of gold, which is correlated to the price of the gold coins themselves. But broadly speaking, what really drives the values of the underlying asset. So in terms of key performance drivers for the gold commodity itself, you tend to find that internationally, the international price of gold tends to respond to economic uncertainty. So whenever the global economy is in periods of economic instability, maybe global inflation is rising, maybe there's a global recession on the horizon, you tend to find that gold is the go-to safe haven asset that investors tend to go for. When you look at inflation concerns, gold tends to be a good hedge against inflation, globally speaking. So inflation tends to erode the purchasing power of most of your fiat currencies around the world. So investors will seek to hedge against that loss of purchasing power, tend to default to gold as an asset for that. Then geopolitical tensions, I'm sure we've all seen the various geopolitical tensions that are at play from time to time. Whenever there's a flaring of tensions in particular regions, particularly in the Middle East, we recently saw an escalation of tensions between Israel and Iran, Israel and Hezbollah in Lebanon, and that has an impact on general global view of geopolitics and how it may then affect other countries because they are allies on both sides of the divide, so to speak, and they may also affect global commodities, especially oil in the Middle East, where if tensions rise, oil production may potentially be disrupted, which may result in a spiking up of the oil price and with its downstream effect. So geopolitical tensions tend to have that impact on the international gold price. If things tense up quite a bit, you tend to see the gold price rising. And if there tends to be relative peace and stability, the gold price tends to stabilize as well. So there is that particular element. And then you've got central bank purchases. I think we've been seeing other central banks like the Chinese purchasing a lot of gold and putting that gold into their reserves. So this actually boosts demand for gold and causes the price for gold to go up. So naturally, all these factors, when they result in a shifting of the gold price, it tends to then push our unit trust prices here upwards as well. Obviously, the correlation may not necessarily be perfect in a sense, but the correlation is strong nonetheless. So by and large, this is essentially how we look at, assessing, the return performance of the unit trusts that we cover. I just chose two particular categories for my presentation today: equities and gold. But as you know, if you go through our report, you'll see that we have a lot more categories that we do cover. We have interest-bearing category, we have specialist funds, we have balanced funds, we have property funds as well. And all these have performances that speak to the underlying assets that the fund managers for those do invest in. So I think at this point, I will just stop here, and then perhaps we can get into a Q&A and entertain questions from the various attendees of our webinar today.
Ngoni, my apologies. Owen, thank you so much for your presentation. I think it was very loaded, very packed, plenty of insights and very, very helpful comparisons that you've drawn for us. I also thank Ngoni Zaishe, who presented before you and gave us that appreciation from the point of view of the regulator, who gets to see things from a bird's eye view. Your independent view, Owen, has also been very, very insightful. And I want at this juncture now to open up to questions and comments from the over 40 participants that we have in this webinar. I don't see any hands raised at the moment. Those who do have a contribution to make, can you simply unmute and go ahead and ask your question? I'm also going to be checking the chat to see if any questions have been loaded there. Any comments or questions? Okay, no questions yet there. While we are waiting for the participants' views, let me see. I've got a question here. Ngoni, remember I'd asked you to reserve your thoughts and share more on the dormancy issue versus new applicants item on the fund managers. In the meantime, thank you, Donald, for your question. And your question is the growth in the unit trust SECZim landscape not linked to the exchange rate growth or deterioration or devaluation, given they are seemingly indexed to USD price of assets? Perhaps, Ngoni, would you take that first, and then we can get a perspective from Owen as well? Thank you.
Yeah, sure. Thanks, Farai. Thank you, Donald, for that question. I think from what we are looking at, I think if we are following my presentation, there's been a steady growth in ZIG denominated collective investment schemes. And it is indeed true that some of the growth is attributable to inflation. There's an inflation element which is embedded in the growth. But it's quite different with USD denominated collective investment schemes. The steady growth, actually the growth which we have witnessed in USD denominated collective investment schemes is largely attributable to new products which have come in, which are denominated in USD, especially the REITs. But I would want to concur that indeed the ZIG growth has got an inflation element to it, but there is also, I think, despite the inflation element, I think maybe Owen would be better placed. I think there's also some real growth which is embedded within the ZIG denominated collective investment schemes.
Thanks very much for that response, Ngoni. And Owen, can you add your views onto that for us?
Yeah, sure. Yeah, I think if you are to examine the growth in our unit trust landscape from a local currency point of view, ultimately it's a case of looking at the various factors that do drive the values of locally denominated assets that investors may look at. I did mention, for instance, from an equities unit trust point of view, that that is one of the key asset classes that does respond best to inflation. So we tend to look at it as more of an inflation play in local currency, because whatever happens, obviously, on the exchange rate front is inflationary to some extent. So that will then actually filter into how unit trust values evolve based on the underlying equities that are invested. But to Ngoni's point, there is also some real growth that is embedded in there. I think we do have the privilege, for instance, of having a US dollar denominated stock exchange in the form of the Victoria Falls Stock Exchange. So on that particular exchange, and many of the unit trusts that are invested in equities actually have significant exposures to VFX listed equities. When you look at it from that particular angle, you are actually seeing revenue growth for some of the equities that are listed there. I think we saw the results from InScore and Simbisa most recently, and we saw how the revenue lines and ultimately cascading down to the profit has been performing with improvements on that front. So there are fundamentals that are at play there. So when you actually see the share prices of some of these equities go up, it's really actually also informed by the actual fundamentals that underlie some of these equities, and not just a case of US dollar indexation and just applying whatever exchange rate would have come through at that particular point. So it is a mixed bag. Yes, we do have some inflationary responses through the exchange rate, but we also have some fundamentals that speak to intrinsic growth and value as well.
Thank you very much for that response. And Donald, if you've got a follow-up, you're more than welcome to come in again, either by type or voice. I don't have any, oh, I have one hand up here. Please, can you go ahead? What I can see here is that it is someone called CC. Please go ahead. Claudius. Claudius, please go ahead and ask your question or make your comment. Please unmute.
Yes, I was trying to unmute, so I think I'm okay now.
Great, you are fine. Thanks, Claudius.
Good morning, and very, very informative presentation. Thank you so much, all the presenters. I just wanted to check on the direct impact of the recent 43% devaluation on the local unit trust and the current values, and going into the future, what are your projections? If we experience a growth that has been more than offset by the devaluation, or what impact will this have in the future investment in the local currency? Thank you. I'm sure I hope my question is clear.
It is clear, Claudius. Thank you so much for taking us where this discussion had to go. Owen, I'll ask you to come in, and then Ngoni can come in immediately after you. Thank you.
Yeah, sure. Yeah, thanks for the question, Claudius. So obviously, any devaluation in the local currency is bound to have an impact on locally denominated asset prices. So for the various unit trusts, particularly those on the equity side, but also those that are maybe on the property side as well, you will see that there will be essentially a market response, so to speak, on the local stock exchanges as prices readjust to the devaluation. The devaluation may not necessarily have that big of an impact on the VFX listed counters per se, because they are already US dollar denominated. But there will be some readjustment of sorts, obviously, on the ZSE and FinSec listed counters, because that is a factor that has to come into play. If you just simplify the argument to say what is the asset base and the asset value, for instance, of company X, in that asset base was denominated in ZIM dollars, or the ZIG currencies, as it were, and if there is a devaluation of that currency, then surely that asset base cannot necessarily remain on that same nominal ZIG value. There has to be an adjustment to account for that devaluation. So certainly we have been seeing that going forward. In terms of what it means going forward, I think the jury is out on that. It really comes down to the ZIG as a local currency, obviously exhibiting stability. We saw stability from April towards the early part of September, before the devaluation then came through. So if that stability becomes something that stays with us within the market, then you will see that the drivers of unit trust prices and their underlying assets will be other factors and not necessarily the currency issue. So that's something that we are seeing in this particular market on that particular issue.
Thank you, Owen. Ngoni, will you jump in at this stage? And then
Yes,
I'll take the questions that I see in the chat.
Okay.
Thank you.
Yeah, sure. Just to support Owen. We have already seen the readjustments which have come along through because of the devaluation. As I have presented earlier, if you look at Q1 and Q2, Q1 ZIG denominated collective investment schemes stood at 913 million. And in Q2, they stood at 924 million. So the ZIG was quite stable. And actually, Q3, we now have unit trust FEM standing at ZIG 1.5 billion. So the jump from 924 million to 1.5 billion is due to the readjustment of prices as a result of devaluation. So yeah, we have really seen the impact on funds under management.
Thank you, Ngoni Zaishe. Thank you so much for your response. And I do have a couple of questions which touch on an issue we talked about earlier from Donald. Thank you for typing those in the chat. Given the number of applications in the pipeline, what measures can we take to ensure quicker turnaround time for approvals and implementation of products to allow for diversified investment portfolio? Which obviously is a question for Ngoni. And then what measures can be taken to improve the number of holders, investors, and also to reduce the failures of unit trusts? Perhaps I'll give that to Owen. But of course, if each of you feels a burning need to respond, you can certainly do that. And then, Owen, there's another one for you which says you explain performance drivers in rather generic terms. Can you please explain them in the context of the local Zimbabwe environment? I'm smiling as I read that question. So in the first instance, Ngoni, over to you as regulator and as one who is concerned with looking at applications and their approval or otherwise.
Okay, thank you, Farai, and thank you, Donald, for that very pertinent questions. I think there's been a lot of talk about the slow turnaround process in terms of CIS applications. But just to maybe just to put this into context, whenever we get applications for collective investment schemes, there's a lot of documentation that we do require. And I think the main documentation we require is the trust deed. And if you look at the trust deed, that is actually the legal document that is governing that particular unit trust. There are a lot of issues that you have to actually review out of that trust deed. And actually that thorough review, we do it out of the need to protect investors who are then going to be part of that scheme. So unfortunately, we can't rush that process of reviewing trust deed, because we really have to make sure that what we are approving is watertight. The investor is protected, and the entire market is also protected from issues such as systemic risk. I think that those are my submissions for now.
Thank you, Ngoni, for reminding us that part of the protection that the Commission is mandated to provide to investors is captured in the rigorous review that is done by yourself and other colleagues at the Commission to ensure, as you said, that what comes to the market ultimately is sufficiently robust. I also would like you to confirm, Ngoni, that in all of the work that you do in licensing the various entities and individuals, there are laid down turnaround times for each of those processes, Ngoni?
Yes, I can confirm, but there are also instances where we probably don't get enough information from applicants, and also instances where we might require further information. So
Yeah.
In some cases, we end up going beyond the stipulated timelines.
That is true, Ngoni. Thank you for that. And I think from my understanding, the clock actually starts ticking once all requirements have been fulfilled, Ngoni?
Yes, true, confirmed.
Okay, thank you so much for that. Thank you, Donald, for the first segment of your question, and thanks to Ngoni for the response. Owen, are you ready for the response to the second one on improvement of numbers? I mean, of course, you know, when we talk some of the goals of webinars such as this one, some of the goals encapsulate raising numbers, the outreach component of this sort of platform, and other initiatives to reach out. However, Owen, let me not steal your thunder. What thoughts do you have on that question?
Yeah, no, thanks for the question. And it's an important one. We are always parroting this line that we want to deepen our capital markets. And I think having a deeper pool of unit trust products is one such way of achieving that. But generally speaking, obviously, investor education is important. We need our investors to understand, the essence of investing in unit trusts, and to understand, the dynamics of the different unit trust products that are available in the market. Obviously, asset managers do put out information on their specific unit trust products, and you can see that information on their website, or when you visit their offices, that information is available. But I think one of the key things that the Commission has actually been doing is to improve investment literacy, if I can put it that way, amongst the younger generation. So you are seeing, for instance, the capital markets quiz amongst high school students. As an example, that is actually a very important avenue through which you can actually improve awareness of what capital markets in general are all about, and specifically what the products, investment products, are there for at the disposal of prospective investors. So that particular work, especially within the younger generation, is very important, because as they become the adults of tomorrow and start to make economic decisions, they are some of the key players that will be pursuing and looking for unit trust products in any event. So just general investor education, obviously a greater variety of instrument design and investment strategy amongst the asset managers. That's always going to be a very welcome development, and it will see the market being much deeper and being more accommodating towards different risk appetites, so to speak. From a reducing failures of unit trust point of view, look, ultimately a unit trust failing is really a case of perhaps two things: from an operational side of things, whether the asset manager is obviously operating within the confines of the regulatory guidelines that are given. So if there are violations, then that can result in a unit trust actually failing for that particular reason. But I think the regulator has been, quite forthright in ensuring that the various asset managers across our markets remain compliant, and to some extent even be generous to ensure that they are given time to actually sort their house if there are some issues that would have cropped up. But I think we have seen a fairly stable unit trust landscape from a failure point of view. The other factor that may drive a potential failure is really a poor strategy. But then again, a poor investment strategy for a unit trust, you will see that filtering through to the actual demand of that particular unit trust. Investors will be able to see that, look, this unit trust doesn't perform that well, so it will have fewer subscribers, a smaller assets under management, so to speak, and investors will be free to go to other alternatives that they actually see in the market. So we haven't really seen too many failures, so to speak. I think under the circumstances, a lot of our unit trusts in our landscape have performed reasonably well.
Thank you very much, Owen, for that response. There is one more that I'll bring back to you in a moment from Give More, the one about the key drivers, performance drivers, maybe going into some specifics. But while you catch your breath, let me just move back to Ngoni and say, Ngoni, have you had the opportunity to delve into some of the reasons provided for dormancy, that dormancy category? What is in there? What does it comprise of? Who is in there and for what reason? So that naturally the market or possibly conversations like this are suitably informed, and also possibly that new applicants will be aware of any pitfalls that previous funds may have fallen into, and any possible lessons that could be learned from that category. Ngoni, if you're comfortable, please comment on that. It also can be the subject of possibly a future conversation. And then, Owen, when Ngoni has finished commenting on that, please come through and provide us your thoughts on the question from Give More, after which we will then move to conclude our webinar. Ngoni?
Thank you so much, Farai. Yeah, it is true that we have quite a number of unit trusts that are now dormant, or some which have actually been seized. But one main factor which has resulted in many funds becoming dormant is failure to take off after licensing. We have had a number of unit trusts which have actually failed to take off, and these are usually your unconventional unit trusts. I think in our market we are primarily used to money market, equities, property, but what we have seen is that we have a lot of maybe it could be commodity funds, or these cosmetic funds which have fallen through and failed to take off. We have also had a number of, also in the ETF space, I think you have cases where an ETF is constituted of several counters, but then some of the counters have then moved to VFX. Some counters are still on ZSE. So that reorganization has then prompted other asset managers where ETFs to actually close down. We also have cases where an asset manager might then choose to reorganize their CIS portfolio. Perhaps they have 10 unit trusts which they are managing, and they feel that mergers could be ideal in terms of costs and in terms of managing costs. So a reorganization of CIS portfolios is also another issue. Then we also have some have been complaining about costs, regulatory costs. They have to pay the trustee, they have to pay license fees, they have to pay financial advisors. So that is also one case. Then we also have the extreme case where we had asset management firms which have been liquidated or whose licenses have been cancelled. For example, we still have legacy issues surrounding TFS Asset Management, which was run by Tetrad. We also have Cornerstone Asset Management. So it's a matter of these funds actually going through transition. Probably they are now being transferred to another asset managers. So in the process, they may still be dormant. So those are the main factors that have contributed to this dormancy issue. But we also do have a lot of unit trusts which have been licensed, but then they haven't started operating as yet. Maybe to the asset manager not having capacity, or the fund not having garnered enough subscriptions for it to take off. So yeah, those are the main issues surrounding dormancy and non-activity within the CIS space.
Thank you very much, Ngoni. Thank you so much for giving us some insights into some of the issues that are encountered by the peers of some of us on this webinar, to understand where those pitfalls have been. That first one about, literal failure to take off may also be explained in, I think it was Owen who spoke about, the fundamentals, which shift and sometimes shift very quickly, leaving an idea pretty much on the table after all the work of conception and design. And then by the time you've gone through that process, the fundamentals have moved and you find yourself with a product which maybe the timing could be wrong to begin to implement. Owen, just a quick response to Givmore's question, then I think we must wind up now out of the interests of time. It's been a fascinating discussion, and in answering some of the questions that have been asked, it's very clear that more questions arise from that. Owen?
Yeah, thanks, Farai. And so in terms of specific, performance indicators that really drive, the performance of asset classes in general, but equities, unit trusts in particular, from a Zimbabwean point of view, obviously, the inflation rate is a big one. When you are looking at equities listed on the Zimbabwe Stock Exchange that are obviously denominated in local currency, the inflation rate itself does play a key role as a driver. That is obviously closely related to the exchange rate. So we almost tend to look at that as sort of one thing, because one side of that coin is closely tied to the other. If the exchange rate is moving fairly quickly, that tends to have an inflationary impact, and vice versa. So in the inflation rate, the exchange rate, those are key variables that you look at in terms of driving the actual price performance on the Zimbabwe Stock Exchange. Interest rates are also important. Whenever there are interest rates adjustments, by the central bank, those tend to then filter into the behavior of economic agents in general. So if interest rates go up, it means borrowing costs have risen for companies in general, and also for potential investors as well, because there are investors out there who probably want to do a leverage play, in essence, where you borrow to invest. So when interest rates go up, it makes you borrowing for that particular purpose a bit more expensive. So it tends to numb the demand for local equities, and you see the response in prices. The GDP growth rate itself is an important metric as a key driver. Whenever the growth rate is fairly high, that is an indication that economic activity is taking place out there, and that improved economic activity will filter into the actual performance of some of the listed companies and their corporate earnings profile and valuation actually then speak to that. So GDP growth is an important factor. The level of foreign direct investment that I spoke to earlier is very important as well, because that is one of those key metrics that define investor confidence. When you look at the equities market performances in countries like Kenya, for instance, or South Africa, and you relate that to the level of foreign direct investment that those countries get, it actually that speaks to the level of investor confidence and economic outlook that investors are seeing in that particular country. So when you see our own FDI go up in Zimbabwe, that actually speaks to an improvement in overall investor sentiment and confidence, and that will filter into the eventual performance of our equities market. So I would say, in terms of some of the key specific variables that we look at, inflation, exchange rates, interest rates, GDP growth rate, the level of foreign direct investment, those are some of the key variables that really do drive our performance of equities markets, and by extension the unit trust that invests in them.
Thank you so much, Owen, for that response. And I'm certain that Give More has been answered fully on that issue. So participants, thank you so much for your patience. It was a slightly slow start, but we caught up, and we're very grateful for the comments and questions that you've made. Allow me just to quickly thank our presenters who were kind enough to be with us this morning, in the form of Owen Nyamusi of Interlego, Senior Consultant and Head of Corporate Advisory Services, and also Ngoni, responsible for licensing at the Securities and Exchange Commission of Zimbabwe. And I am Farah Mpofu, who was hosting this webinar for you today. We look forward to seeing you. And if there are issues that you'd like to explore and use the platform of the regulator to discuss them, please feel free to get in touch directly. We look forward to seeing you. Have a great day. Bye.
Thanks, all right.
Thank you. Bye.
Yes.